Hi, this is Charles Kelly. Monday the 4th of October. I wanted to give you a business news and money update for today, Monday the 4th of October. Well, today Rishi Sunak was giving a speech at the Conservative Party conference. He is, of course, the Chancellor of the UK. And he said that he would be announcing a £500 million grant or series of grants to help people get back into employment. This was his speech at the Conservative Party conference, which is the annual conference of the parties. Now, most of the big parties have these conferences. The Liberals were the first ones, then Labour was last week at Brighton. The Conservative Party is a big conference centre in Manchester. The Green Party, I think they're in an organic cafe in Brighton. I think their conference next week, but I don't. That's just a joke. I'm not going to go at the Greens, by the way. So that's just a little joke. So anyway, their conference kicked off. And of course, they are the ruling party. They're in power, so it's more important than listening to oppositions. But it was interesting. He didn't give a lot away, but he said that his main theme was that recovery comes at a cost, or with a cost. Recovery comes with a cost. And he mentioned that the country is, the national debt of the UK is 800% of GDP. That's the sort of annual income, if you like, which is a lot, isn't it? Because, I mean, if you think about a company had that much debt that the country has, they would be wound up. They'd be put into bankruptcy and put under, really. But countries can seem to go on printing money like this and get away with it. America's the same. They printed trillions of dollars. More money than has ever been printed before has been printed in the last couple of years. So this money printing keeps going on. And what does that usually lead to? Inflation. And I'll come on to inflation in a second. But he said that there's no plans for tax cuts. Now, usually at these conferences, the government use these events to not just a rah-rah with the troops and rallying the troops. Yeah, there is a bit of that. But it's also used as an event to sort of pre-announce policies, new policies to get them out there, to get them out there in the media. They usually don't give you much detail, as he hasn't. They just band around these figures, 500 million in spending and that sort of thing. But usually at these events they'll talk about Conservative policies, which is usually low tax, low government interference, low regulation, low tax. That's the traditional idea of the Conservatives. But in fact, Sunak is putting up taxes. They're not going up immediately, but they have gone up, or they will go up for corporation tax. National insurance will go up, and they've frozen the thresholds on income taxes, which means the thresholds are the amounts that you hit before you pay tax or before you pay higher rates of tax. So they normally go up with inflation. They've been frozen. So as people earn a bit more, they'll start to pay more tax, or they'll hit the tax threshold quicker due to higher income. So that in effect is like a tax rise. And so he said that there'll be tax rises. There won't be any tax cuts because all of this has got to be paid for. The recovery has to be paid for. And in a way, I've got to agree with that. But putting up corporation tax to 25% in a couple of years' time will deter businesses from coming to set up in the UK. And as you know, last week I was at an event where lots of startups were getting going and raising funds and raising capital in London. This has become quite a hub and a centre for startup capital. So you don't want to deter those kind of businesses, because it's the businesses and the money they earn, the revenues and the taxes they pay, that will get the country out of this recession, not the government. The government doesn't have the money. It just taxes you, I, and the companies. That produces the revenue to keep government in power and keep government going. But so you need businesses to get this all going. The other thing all the people are talking about is green energy and green this and green that. But, I think we're putting the brakes on a little bit too fast for traditional forms of energy, because I think countries in the West will suffer because they're pushing too hard to become green, while China just continues to burn coal at hundreds of coal burning power stations. And yet here we can't even open up a small power station in Cumbria without the world beating on their door, protesting against it. So and I think China is sitting back and watching us go green while they just keep powering their industries ahead. And, of course, a lot of this green technology is manufactured in China, so it's playing into their hands again. But anyway, we'll have to see how that works. That's like the bigger, wider economy that I can't really control. But I'm here to sort of talk about it. Evergrande, you may have heard this story of Evergrande, the big, massive property company that's in trouble in China. They missed a couple of deadlines to pay their bond interest, but they have a 30-day grace period. Now their shares were suspended today in Hong Kong, pending an announcement, and it looks like a company, I think it's called Hobson, are going to buy some of their properties, buy one of their divisions for $1.5 billion. So that could get them out of trouble for now. I think, one man's disaster is another man's happiness, really, isn't it? Because, they'll competitors and other predators will be able to pick off the best parts of their company that they will have to sell. They've already sold a stake in a commercial bank last week to the Chinese government. So it looks like things are settling down. That there were fears that if they collapsed, it could bring down the Chinese economy and other Western economies as well, maybe cause a debt crisis and a credit crunch. But I don't think the property bubble is over yet in China. I still think there's a property bubble there, as there are in other cities, other countries, Australia, New Zealand and Canada. So we'll have to see how that goes. Now, I mentioned inflation earlier, and in many European countries, the cost of natural gas is going literally through the roof, and people are already starting to pay more for their bills, their gas bills in the UK, and electricity is also going up. The cost of fuel, oil, petrol, all of this is going up, which is adding to inflation fears. Now, inflation, as I said to you about a week ago, is already hitting 4%. This is double what it was a couple of years ago. And, it's people might think, well, what's that all about? So what? Inflation 4%, that's not much. And a lot of younger people might not think much about inflation because they haven't seen high inflation. I've seen inflation at nearer 20% many years ago, and I've seen where governments struggled to deal with inflation. They just couldn't cope with it. And this is in other countries as well as here. I've also seen hyperinflation in Argentina and Venezuela and Zimbabwe. And in Zimbabwe, it wiped out their currency virtually. So I know what inflation's about. And younger people might think, well, inflation's never really affected me. But it is starting to creep up or leap up, actually. And I don't think it's going away. And these energy prices and fuel and petrol and all the things that seem to be costing more in the supermarkets are all adding to inflation. And what does inflation do? It erodes the value of your money. It eats away at the buying power of your money. So 4% inflation means that you have £100 in the bank, and next year inflation hits it. That £100 is effectively worth £96. It has the buying power of £96, and then the next year after that, it's 4% again. So it's an accumulative effect. It's like compounding, and it eats away at your money, especially if it's sitting in cash or in areas where it's not earning very much. Now, I mentioned here why inflation makes the rich richer and the poor poorer. Well, the simple thing is, rich people usually have assets like property, like shares, like companies, like bonds, and they tend to go up in inflationary periods. Same thing with gold. And obviously, if you've got a massive property portfolio and you've got 20% inflation, which I have seen in my lifetime, usually properties would be going up by a similar amount. I remember when I was a financial advisor, we would quote future growth rates at figures as high as 10%. We'd say, this is what you'd get back if it grew by 10%. This is what you might get back if it was 7.5%. Oh, and if it's 5%, well, no way it's going to grow at 5%, but there it is. If it grows at 5%, you'd only get this amount back. Well, now those figures have been scaled right back because of lower inflation. I mean, it's all right earning 10% on your money, but if inflation is running at 15%, you're still losing 5% in effect. You're not keeping it a pace with inflation. So now we have almost zero return on our money in the bank, and inflation is 4%, and we're earning 1/10 of 1% on our money. But the rich have been getting richer during inflationary periods. And we've seen in the last year how properties have shot up in value. And assets like property, bonds and shares tend to go up during inflationary periods. So you might see the gap between rich and poor widen. Now, I'm not a communist. I'm not proposing communism here, but we need some sort of level playing field, because definitely with all this money printing and the amount of money that's been pumped into the economy via the institutions and people at the top, it's made people at the top a lot richer, while other people further down the scale, the poor and middle class, have been falling behind. Their incomes in real terms have been falling behind with the cost of living. And this is why people say, well, it's not, they don't feel like things are getting better, things are getting worse, things are getting tougher for them. And that's a common thread. While the rich and the super rich have just gone into the stratosphere, that you've got almost trillionaires now, not just billionaires. The amount of billionaires and millionaires has risen. Now, I'm okay for people making money, but we need some sort of level playing field. Like we had this story of Federal Reserve people part of the Federal Reserve, able to profit from the money printing by selling bonds that they owned, selling assets that they owned to the Federal Reserve, to the government in effect, and benefiting by millions of dollars because of this money printing. So they were in the inside track. So there's like their little club they've got. They can see what's going on in the inside track and the rest of us on the outside track. In other words, it's like a rigged game. And how can the ordinary person win in a rigged market, a rigged game? So that's what I'm saying. We need a bit more of a level playing field at the larger end of scale. But that's how inflation can affect your savings and your future wealth. Now, I'm not saying pile your money into property and shares, because I think there is a bubble there. I think there's definitely a bubble in shares, and lots of experts I've been following have said that this bubble in the stock market is bound to burst soon. Some are predicting even as early as October this month. Some are saying it could run on until Christmas and then maybe in the early new year go down. But when it goes down, it could be a stock market crash, not just a little bubble bursting or a correction, but it could be one of the biggest crashes we've ever seen. This tends to happen every few years. There's a cycle involved in this. The last one was around 2008. We did have a crash, of course, during in 2020 when things really did go a bit crazy, but that recovered fairly quickly because it was almost like a fear of what was going to happen. But a real crash is more of a longer term crash. Things will go up and suddenly they'll go down by 40-50%, sometimes more than that in the Great Depression, in the stock market crash of 1929. But we've had other crashes, 1987, others in the 70s, in the 90s. And then you lead from that into recession, and that can be many years to recover from recession. And usually after a big stock market crash, recession, what will follow but property? And when property goes down, then it can take a long time to recover. I know property did go down in 2008, but because of the money printing, they recovered fairly quickly. I've seen recessions where it took 5-6 years before a property that I'd bought, and this was after property prices had gone down. It wasn't the day before everything crashed. It was after property prices went down. So I remember the big stock market crash at 87. Then property sort of followed the next year, and so that was 88, 89, 90. I think things started to get tough with recession. I think interest rates were high, and then I think I bought a property 1990. So it's 3 years after the stock market crash, and when things had already gone down, bought a property, and it took 6 years before that property recovered to the price that I'd paid for it. I needed to sell it at that time, and it took 6 years before I could just get my money back on it. I didn't even make a profit on it. Okay. Now, obviously, if I'd waited, of course, it's worth a lot more. But I'm saying that things can take a long time to recover. So I don't think things can always bounce back like they did in 2020. But at that time, there'll be opportunities for people. If you have money, you have cash, there'll be opportunities to buy shares at rock bottom prices, shares while they're on sale. And the same thing could happen with property. Nobody knows when it's going to happen, but things just don't keep going up and up forever. They eventually reach a point where the bubble will burst, particularly if it's a bubble that's been created by trillions of dollars and pounds been artificially printed and pumped into the economy and creating an artificial bubble. Because it's not down to productivity, really. It's just down to this artificial money printing. It's almost like they're trying to stop the country going into recession. And money printing in the past has always created hyperinflation. So I'm not saying we're going to have the hyperinflation like we did in the German Weimar Republic, but there's problems ahead. I've no doubt about it. And then what happens then when there's a recession and you've run out of ideas? You can't just keep printing money. What happens then? Then there'll be problems. Then recession could lead to depression. So I'm sorry to pardon the pun, be a bit depressing, but out of that there could come opportunities. So just watch, monitor things. I'm not you're a financial advisor, but if I had all my money tied up in the stock market, I would want to put some of it away safely. If I had all my money in cryptocurrencies, I'd want to be a little bit careful, a little bit cautious about that. But you've got to take your own advice, go and see your own advisors, take your own counsel on that. But just be careful, because I think we're in choppy waters ahead, volatile times and all that sort of stuff. Now, the first step to building wealth and turning your finances around is financial education. And so that you don't have to rely on financial advisors. You don't have to rely on your bank manager, your accountant to tell you about finances. You should be educated yourself. Millionaire habits, billionaire habits have been studied, documented by academics for years. We know there's been studies in Harvard Business School. We know that there's been books written about this by such authors as Napoleon Hill, Think and Grow Rich, and then other books like The Science of Getting Rich, and many, many other books, some of them written in the last century, nearly a century ago. Now, I've published my own book on this, Money Can Buy You Happiness. Yes, Money Can Buy You Happiness, where I talk about the wealthy, how they get wealthy, how they lose their wealth sometimes, and how you can get wealthy. And I want to develop this into something more. So you don't have to go and buy the book, because I put up a free training which goes specifically into how you can become financially free without necessarily working any harder than you are now. A lot of people work hard for their money, especially at the lower end of the scale, whereas the rich make their money work hard for them. So it's not all about hard work. It's how you use this and the decisions you make, and how your mindset and having the right knowledge and education. So do look at my free on-demand training. It's up there right now. It won't stay up there forever, because I'll be changing things around soon. So do click on the link and watch that training, and I will see you there. Thanks a lot. Good evening, and bye for now.